Matt Orton is with us. He's U.S. market strategist and chief market strategist at Raymond James Investment. Matt, great to have you with us here. Thank you for your time. I'm sure you were watching the debate. I'm not sure if it's still on. Were you?
I was watching it up till almost the end.
Okay. So who won?
It's really hard to say, Prashant. You know, it was very light on policy, I would say. There was a lot of barbs that were traded back and forth. There was a lot of talking about the key points they wanted to both get across. But I don't think that much substance was actually discussed during the debates, which frankly, from a market perspective, isn't necessarily a bad thing. At some point, we're going to have to focus on tariffs and some fiscal discussions around the deficit and the debt. But really, I think it's going to be status quo for the market, and it's just going to be focused on the fundamentals. We've got core PCE inflation tomorrow, and that's really going to be the big mover because so many investors are focused on whether this very slow drop in inflation is in fact going to be sustainable. So I think that'll be the key thing to watch tomorrow when the U.S. opens.
Just one thing, was there any mention of China at all? Because I watched not all of it, but was China mentioned, tariffs, etc.? Nothing.
Not from what I heard. It was all about domestic policy, and I think Afghanistan was mentioned maybe once or twice along with Ukraine.
Okay.
Matt, hi, good morning. Since we're talking about China, right, let's also get your view on the India versus China debate, because many people do believe that India has run up quite a bit and perhaps now the better place to be is in China. Your thoughts?
Yeah, good morning, Sonia. I absolutely agree. You know, when I was with you all a couple of weeks ago, I think we were talking about the India versus China trade as well. And I continue to believe that China is really just a short-term trade for investors, and India is the long-term investment play. And I think you're starting to see that with behavior from foreign investors. The inclusion in the MB index from a fixed income perspective is huge from an investor sentiment point of view. And what's, I think, most important for India, and I think most exciting about India relative to China, is the growth potential. It's the fact that you have public-private partnerships, you have tangible earnings growth that's supporting the overall economy with a real burgeoning middle class. And all of that comes together to support a very, very dynamic market. And when you look at India, I know you had charts up about Taiwan, the US, and other global markets on a year-to-date basis. What's different about India relative to many of those other global outperformers is the fact that India hasn't just been a narrow market. There's been a number of sectors and single stocks that are all contributing to the gains. There's breadth in India, and that's what a lot of other global markets are lacking. It's been one sector or a handful of stocks that's been largely driving the indices higher. So that's another reason why I encourage investors to continue looking for India and using any sort of downside or sideways movement to maybe make sure that you do have exposure to the country.
In our last conversation, Matt, you spoke about liking L&T, ICICIBank, and M&M. I think these were three of your preferred stocks in India. Do you still like just the same three names, or have you made any changes, any tweaks to your portfolio on recommendations when it comes to Indian stocks?
So ICICIBank is still one of my top picks. I just believe the fact that you have quality loan growth in the upper to middle double digits is incredibly important. You've got an expanding private bank plus good return of capital. I think that's one of my top picks in India overall. L&T, I think, is a little bit more of a wait and see. I've lightened positioning a little bit over there, and I've exchanged that a little bit for starting to look at Indian technology as well. It's been an area I've been very hesitant to move into just because indications with respect to global spending haven't been that strong, but you've seen the likes of Infosys. You're seeing a little bit more positivity coming up, and valuations there are still relatively attractive. But another top pick for me stays in the infrastructure theme. Infrastructure overall is, I think, going to dominate over the next 3 to 5 years. And so as an investor, you want to have exposure to that. So Adani Ports still makes a lot of sense. Ambuja Cements, which has exposure to that theme. I think those are all picks that are worth looking at, particularly if you do get some downside to pick up.
Okay, well, we will thank you on that note, Matt. Have a good one, have a good weekend, and we'll touch base with you again very soon. That's the word coming in on the market on